Today is Tuesday, May 5th, 2020. My name is Evan, and welcome back to another midweek market recap video. Now, as you know, we are still in the process of reorganizing a little bit of these market recap series. We are kicking off this edition here with our old technicals dashboard. I know many of you like it, and it is a great overview of what's going on in the market. And just as a reminder, we do want to keep the midweek videos like we're doing here just a little more brief, actionable, and kind of focus mostly on what is actually moving over these past couple of days. Our weekend edition certainly going to be the more more analysis, more thorough view of markets. So let's jump in here. You can see all of the major indices closing today, positive territory. NASDAQ 100 back in front, leading the charge to the upside. 5-day change numbers you can see are pretty mixed. If you recall, last week we had a little bit of turbulence into the end of the week, so we're seeing some mixed changes here, some performance numbers. NASDAQ still the strongest, Russell 2000 now the weakest. We are above the 1050 across the board of all the major indices, and we are below the 200 SMA across the Dow, SPY, and Russell. If we scroll down and take a look at sector performance, notice, so one of the changes we added here, and this came from mostly the weekend edition now, is the XLC. So this is kind of just taking right from Spider Select's website and how they see, kind of breaking down the market. This XLC is one of the newest groups, and this is their communications ETF. So this has media, entertainment, telecommunications. Those are the types of names that are in this particular sector. It is the top performing over the past 5 trading days. This is really heavily weighted to like a Facebook, Google, Netflix. I mean, I think those three just have a very large stake in this particular sector. And then, of course, Disney and many others, Verizon, T-Mobile, all sort of fit in here as well. But one of the top performing, followed by technology and energy, and mostly here on the downside. Now you can see most sectors are in the red over the past 5 trading sessions. Utilities, industrials, financials at the bottom of the pile. Now in terms of major markets, oil back at the top, followed by natural gas and high yield. And on the downside, we have TLT, we have international stocks, and we have emerging markets. So let's jump into the charts here. We're going to start with our trend filters view on the weekly time frame. A couple of things I just want to point out here. Look at the S&P 500 in the top left. We tried to move into the transitional state here last week, and notice we are right back to the negative after a sort of a brief attempt last week. Same thing down here in the Russell 2000. We tried to transition last week into the yellow. In fact, we did transition into the yellow, but notice we're back in the red here as well. It is still intra-week, so this certainly can change come Friday, but you can see we're sort of getting some rejection here, still kind of have that longer term sell signal in these two markets. NASDAQ standing alone, nice and bright green here, showing its leadership status. International stocks still in the negative. If we go to the daily time frame, everything is still got bullish trend here. It's getting close in a number of these markets. So the Russell, the S&P 500, international, look how close they are to some of our trend filters here. So they will be tested, especially if we do see continued rollover into the end of this week. But for now, we're still holding up on this bullish trend here, and we'll see if that changes come the end of the week. So with that, let's jump into just some of the individual price action analysis of, say, the S&P 500. Switch over to less chaotic view here. Really, if we were looking at this view here for the S&P 500, we just go down to the daily chart. Just a couple of notes I want to point out here. I can probably get rid of these old arrows here, but essentially this 2,900 area is where the S&P 500 topped out last week. You can see after 2 days of selling, 2.5 days of selling, we started some early selling on Monday, but after about 2.5 days down in the S&P 500, we reversed yesterday and continued to bounce here today, certainly closing off of the highs of the session. But really, kind of what I want to point out here is careful not to get chopped up now in this type of environment. This looks like, in fact, doesn't look like, it is sort of a trendless environment here in the very short term. You're seeing kind of mostly sideways stagnating price action here, and this can be dangerous for traders that just want an uptrend or a downtrend. When things are moving sideways like this, you do have to be a little more cautious, especially in the middle of the range here. So I would look at the top of the range up here around 2,900, bottom end of the range really. You can start to look at, call it about 27.30 or so, which is where we sold off back on Tuesday, the 21st of April. That's a sort of lower level range here that I would start to pay attention to in the S&P 500. So for now, we're off of the highs here. We did come in and sort of fill this gap back from Friday of last week. So we did get a little bit of a gap fill pulled off of that area, and now we're sort of waiting to see what's in store for the rest of this week. Russell 2000 here, again, remember it had this big march to the upside here, so it had this big kind of exuberant rally here late last week, really the past 2 weeks or so. Then we saw a pretty swift sell-off here, so you saw a move all the way down, about 10% pullback. Same story, we started yesterday off lower prices, sellers kind of dried up there, we reversed, closed strong, and then you can see we did initially pop up, kind of close the gap here as well, but closing more negative here, so a little heavier, back to its old sort of heavy status here, underperforming the Russell 2000, and again, we'll have to see how that finishes out the week. I'd be paying attention to, again, 117, that's going to be the lower bounds here, especially if we do sort of put in a lower high, maybe even if today was a lower high, so you have the high back from the 29th, which was last Wednesday, and then if you figure that this potentially turns into some type of lower high, then you get sort of a second measured move down into the 117s. Keep an eye on that if that starts to roll over into the end of the week. And then here, NASDAQ still looking, again, very strong relative to the other markets. You can see it did actually attempt to break out to new recent highs here. We did get faded, did get rejected off of those high levels here, and did close the session down near its lows. Still up 1% on the session, still holding up best in class. 211 is a level to pay attention to, and then around 204, which would be the sell-off from the 21st. Those are the two areas I'd be paying attention to there in the NASDAQ 100. Now, outside of equities, we'll take a quick peek at commodities because oil is moving quite a bit here. So if we go back to our grid now, our trend filters on a weekly time frame, you can see gold still strong buy signal, silver in the negative still as well. Oil considerably negative. Same thing with the overall commodities. And if we go down to a daily chart here, you can see things kind of similar. Oil still sharply negative despite the nice rally it's had recently. See silver also kind of aligned here in the negative, and gold top left. I sort of bounced around in different order there, but gold in the top left still holding bullish trend. So if we take a look, really I just want to look at silver, oil and natural gas, because I think those are the most interesting. So if we look at oil here, again, you can see we've enjoyed a nice 10% rally. This is a nice move higher off of the lows. And in fact, we are basically, let's see, about 30%, at least 30%. There's some reverse splitting going on here. But yeah, about 30% off the lows here in USO. Again, very counter trend, so you do have to be extremely cautious here. The fact that it has rallied so much off the lows probably starts to look even more interesting on the short side again. I know it is deeply oversold, so you have to be careful if you're playing that. Any type of USO trading right now is certainly going to be speculative, so you have to be careful here if you're trying to express this trade. But still, that is certainly what's moving this week. And natural gas sort of started to drop this off the usual analysis here, but you can see natural gas also getting a nice pop today. Did fade off of the highs, but starting to move back up into and above some of this recent levels up here around 1430, these recent highs. So things looking pretty good there for natural gas, trying to get some momentum, and you can start to see on these up days getting a few more accumulation days on heavier volume printed over the past few weeks. So that is it. That is the majority of certainly what's going on this this week. Not a lot has changed. Again, I just want to focus the attention on being cautious on not over trading in this type of environment. We do still have earnings season that we're going through right now, so expect more headlines, more company and sector risk in that respect. But right now, looks like it's kind of messy, a little choppy, a little bit of indecision out there. So we'll see how we finish out the week. We'll be back on Friday with our in-depth version. A few more changes coming for that recap video. But hopefully you guys are doing well out there. Thanks so much for all the feedback you've given me on some of the changes we've made. Appreciate all of the comments, emails, and everything else that we've received. So that's it for me. Thanks so much for tuning in. Every Tuesday doing market recap videos, or really what's moving in the market, updates every single Tuesday, and then trade ideas out on Wednesday. That's still the schedule going forward. So have a great rest of the day. We'll see you in the next video update.